So the hybrid market in Australia has traditionally been very retail focused, which is absolutely fine. It's an income product. It's understandable that it's attractive to SMSFs and income seeking investors. However, one of the issues that creates is that the investors who hold these hybrid securities generally don't have valuation models to know when those hybrids are cheap or expensive. I know for myself, I certainly don't have a valuation model to know when a particular hybrid is over or undervalued, and in actual fact, nor do most investors in the market. So that creates a bit of a risk for investors holding a security quite passively, but that conversely is potentially an opportunity for an active manager who does have that valuation model. They know when things look cheap, they know when they look expensive, and they can trade actively to take advantage of those opportunities. The other factor around active management in this space is just that inherently these securities are very complex. Almost every hybrid in the market is issued under different terms and quite complex terms. And for an individual investor to fully understand the risks associated with each of those different terms of issuance is quite detailed and very complex, and something that we think is best left in the hands of an active manager. Yeah, look, I mean, it's really not that complex. I think these securities tend to be held relatively passively, and I think people in some instances underestimate the risks associated with these securities. Certainly I've spoken to some investors who view them as almost term deposit style products but with higher income, and most certainly they are not. There are circumstances where these securities can be converted into equity, and normally that would be at times that would be inopportune for the holder. So I think the mistakes that people make are to be a bit too passive in this space of the market and to not fully understand the risk and complexity of this product.